Welcome everybody, Doug McKay on the 1st of April 2011. Somewhat of a short video tonight on Friday after the market closes. All four categories are still long: equities, bonds, metals, and energy. We do not have a position right now in the managed accounts in bonds, and to me that looks like it's about to potentially roll over. So we'll pull that up a little later. Right now we're looking at a chart of the SPY. This is a daily chart of the SPY. We talked a little bit last week once we got above the 50-day moving average. We broke above this trend line. Even though we had a lack of volume, we saw that the overall trend has changed from short to long. We had follow through this week. We got above 1320 on the S&P cash, or 132, which was a major area of resistance here, or the next area of resistance once we got above 1300 or 130 on the SPY. We do have a gap here. We may come down and fill this next week. What we want to do is we want to hold 1300 or let's say 130.50 on the SPY. And essentially what we want to do is we want to take this somewhat of a left shoulder here and build that out over here, where maybe we are in a trading range for a number of days, and then essentially we break out of that trading range to the upside and either test 135 or go through it. I would become very cautious if we were to break down through 130, 130.50 on heavy volume. All right, but for right now the overall trend is up, obviously. Taking a look at a daily chart of the Dow, put this post out a while back. Once we got above 12,000, that was a good sign. More specifically, as a matter of fact, once we got above 12, we said we'll probably take a run and test the previous highs, which we did. That's why we drew this line in, and obviously we're above that line. That's good. We did go above intraday, and I think it was a 2.5-year high today, but we closed lower. So we'll see what happens next week. Might have a little selling here with a double top. Obviously, if we were to break through 12,100, we would become very cautious, if not hedge our long position with a short. All right, if we broke down through 12,000, we would exit any long positions tied to the Dow that had a similar chart pattern. Let's take a look at some of the energy stocks and or ETFs. Last week we said if we got through 160, I think we said this on the radio on the OIH, that was a good sign. We did bust through that this week on Monday, and then we had some decent follow through. We can look at the same type of chart on USO. We did put out a post last night on a weekly basis. Let's see if we can bring this up on a weekly if the notes are still there. Once we got above this candle, that was a good sign. I would have my stop in the 39 area here. All right. Again, we do have a little bit of a pullback in volume almost on everything, so that's something to be concerned about. Let's take a look at the 10-year Treasury, and you'll see why we don't really have a position at this time in either corporate bonds, high yield, or anything tied to Treasuries, which would be the IEF or the TLT. But here we are in rates here. This, as we mentioned last week, is an area of resistance. If we were to get above, let's say 3.6 on interest rates on the 10, that spells bad news, in my opinion, for bonds, because at that point I think we're going to test these highs here and possibly go further. But right now we're kind of in between, trading sideways above and below the 50-day moving average. When we look at the IEF, very similar situation where we got above this trend line, downward sloping trend line a couple weeks ago. We closed above the 50-day, but now I see basically a breakdown in the IEF. We want to definitely hold this area here, which was the low that we put in today. All right, I would probably not get long this. See all the resistance over here where the crosshairs are. Probably wouldn't be interested in this unless we got above 94, 94.50. For now, I think we're going to go sideways to down. Let's take a look at the LQD. Again, we broke down through the 50-day moving average today. This is the corporate bond ETF. We held support right where the crosshairs are. Pretty much goes all the way back here into December and January. For me, I would have to see us get above 109.20 to get long this. 109.20, which is resistance here. In the meantime, I think very similar to the other bond ETFs. We're going to go sideways to down. Let's take a look also at junk. I haven't looked at this in a while, JNK. We talked about getting into this in the managed accounts, but as the pattern panned out, I didn't see it as a highly probable trade, so we stayed out of it, and I still have the same feelings that we're going to probably be in a sideways trading range here for a while. Let's take a look now at the metals. Let's take a look first at silver. If you guys follow the blog, you know we sold some of our silver position, half of it a while ago in the managed accounts. We have a stop in place on the balance. This chart to me looks fairly decent, especially if we get a close above these highs here. Maybe we're going to go to 40. So what we'll do is we'll just trail a stop. We're doing a little bit something different in the GLD. And I mentioned this on the 29th, that what we're doing until we get a close keyword, not intraday like here, but until we get a close above 141, we're going to keep a hedge on 1 for 1 in the DZZ. Once we get above 141 on gold, if that does happen, we'll dump the DZZ, which is double short gold. But for now, we're going to keep this position on in the managed accounts. All right, so whoever breaks out or breaks down first, we'll cut the other one loose and let the other one run. Let's take a look at the Dow INDU. Tomorrow we're going to talk about on the radio about the multiples in the market at this time and what would make the market potentially go higher and or lower. But again, this chart we pulled up previously, you can see that we have what we talked about here, which was a inverted head and shoulders. Here's the left shoulder here. We were looking to build out a right shoulder. Once we got above that neckline, upside down, inverted head and shoulders, head here, that was a very bullish sign. We've got a little bit of resistance here. We pointed that out earlier today. Let's take a look at the NASDAQ, COMPQ. Now, we did say that if we got above 2,800, that looks very, very bullish on a weekly and a daily chart. And today, intraday, we got as high as 2802, but we closed lower down at 2788. Ideally, again, for the highest probability, and that's what we're dealing with, is probabilities based on looking at these charts, pattern recognition, is we would like to trade sideways, maybe between 2750 and 2800 for a period of time, almost a mirror of this left shoulder over here, and then break out through 2800. Okay? All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. April Fool's Day, April 1st, 2011. The overall trend is up and everything. If you're in bonds, be careful, and we'll talk to you next week. Thanks.